So I want to do a quick video on how to profit from Tesla earnings today. Now, Tesla was doing some pretty mental numbers today. I'm going to go ahead and take auto off. And just looking at Tesla, it opened up pretty high today. I think Tesla moved from yesterday a bit. Oh, it would gap down actually. No, it stayed about the same. Yeah, it stayed about the same. Anyways, I don't know where I was going with that, but Tesla had a lot of movement. So beginning of the market, we ran about 1%, and then we had a trend down. I think we ran down 2%-ish. Let me just draw my lines to just verify from top to bottom. We ran down about 2.6%. And then Tesla had multiple runs. It was kind of just consolidating. It was going up and down, up and down, up and down. And it mostly stayed between its levels. But it couldn't break down. It couldn't break up. We just stayed between our levels. And fucking earnings came in. And that's where our huge movements of the day were at. Right? So I want to look at something. Tesla was going down towards the end of the day. If I go here, and I go all the way here, towards the end of the day, Tesla dropped 0.36%-ish towards the end of the candle. Should go right here. Yeah. 0.36%. That's not really much movement, but Tesla was going down. So if I go here and I look at my puts should technically be a little bit more up, be a little higher than where I saw it. Right? So I'm going to have to open this and a new chart. Let's see. View chart. Now, if I view this chart of Tesla right now, I'm going to see very quickly if Tesla went down, why the hell is my puts just plummeting? Well, could it be from time decay? Doubtful, because earnings is coming up and implied volatility is there. Well, I'm seeing Tesla puts go down. It's kind of going against what the market should be. And if I pull up a call, so look up Tesla calls. I'm going to pull up a call option, and I'm going to see that calls also went down. So let me pull up an $800 call. Let's see, view chart. I'm going to view an $800 Tesla call. Ah, God damn it. If I view this $800 Tesla call, I'm also going to see that this Tesla call went down. So what can I do in order to profit on this? Well, what I could do is I could sell contracts that I don't have. That basically means is that the market is running right now, and I'm going to be like, okay, I see that contracts are plummeting right now no matter which way the stock is moving. It's not even moving that much, and I'm seeing, a massive plummet downwards, right? I'm seeing a 22% drop. I think that's what I looked at. Hold on, let me try to see if I can do this again. Yeah, I'm looking at a 22% drop. And so basically the market is, people are scared. People don't know what position to do. So everyone's dumping their contracts, and earnings is coming up, and anyone who bought calls, probably it's going to dump. Tomorrow the options are going to dump even more because all this implied volatility on the contracts are going to go down. Now, I will admit that Tesla right now has one of the lowest implied volatilities of the contracts. Now, further you go out of the money, the higher implied volatility you're seeing. But that's because, these are very cheap contracts, very low volume as well. All the volume in the contracts were around this price, 109,000 implied volatility. But I digress. Tomorrow, earnings are going to come out, and all this implied volatility is going to be gone. It's probably going to drop 30% implied volatility. And so Tesla is going to, all the options are going to be worth a lot cheaper than what they are now. So what you could do is you could sell contracts that you don't have. It's called leveraging contracts. It's kind of like shorting a stock, but you're shorting a contract. You're betting whatever contract that is going to decrease in value, and you sell the market's contract and you buy back a contract later and you pocket the difference. So let's say this this 780 call right now is worth $8.30. Well, because the implied volatility on it is so high, I sold it for 830, and what I'm gonna do is I'm gonna buy back the contract tomorrow for about $6 because I know the contract is gonna lose a lot of its value because the implied volatility is gone. The volume's gonna go down. A lot less people are gonna be willing to pay such a high premium for that same contract because earnings is already over. No matter in which direction earnings happen for Tesla, it can go up, it could go down. Like, it does not matter because I know the implied volatility killed all the prices on the contracts. This movement was already priced in. Whether people bought puts or calls, they're losing money tomorrow. Guarantee you. So that's how you make money on this play, right? Now, what you could have done also to, let's say you didn't want to be as risky, is you can go all the way to yesterday when the implied volatility of these contracts weren't as high, right? So yesterday, this same contract, this 380 contract for this same day expiration was probably worth around maybe, I'd say about $7. So you probably could have pocketed a $130 difference if you would have just waited until today to sell the same contract, right? Now, let's look at this 380 call again. We're in this, this is the $800 call. $700 put. Okay, so the $800 call was $450. Let's actually look at the difference in this contract. So, today the contract actually dropped in value. Oh wait, that was this morning. But look at that run. The implied volatility definitely had a movement in this contract today. So yesterday, this contract was worth about, let's say, the contract was worth about $4.46. And then when on market open the next day, look at this huge gap, first of all. That was a huge swing. It was a little bit of a gap. But if you would have waited till about, I'd say, first couple runs on the candle, it went all the way to $6. So from $4 to $6, $220 difference. I'm bad at math. I don't remember the price that well. Now, obviously, it took a little tank, but we know this contract, this $800 call, right? Yesterday, it closed out at $4.65. The same $800 call, $4.50. You really didn't lose that much money, but that's because it tanked all the way at the end of the day. But if I look all the way before options started tanking, let's look. All the way before options started tanking, it was worth all the way up to $5.90, which I wouldn't even hold it that long. So you could have made $100 just swinging that option. You would have made 25%, just about. And that's not even if you sold it at the high. It went up all the way up to fucking 740. You could have almost doubled. I'm looking about like 80%, 75% on this movement right here. If you would have bought it at literally the closing on yesterday and sold it at the high today, that was a 60% gain. It dropped here, but under this level, I'd say under this level, that's all profit. Look how many times you were in the money today. And then towards the end of the day, Tesla started dumping. And even when Tesla started dumping, this contract was worth $5.32. So you people play on the implied volatility of Tesla puts or even calls, right? The calls were up. Tesla puts had a similar movement out. Tesla puts just invert this, right? So if I was to buy a Tesla put, I could have saw the same movement just later on in the day. I would have made money. But why would I make money? Because the implied volatility is pricing this contract significantly higher than where it would be yesterday. Nothing can change in the stock as long as I say, hey, the stock has earnings. A lot more people are going to want to buy options. There's going to be a lot more implied volatility. So people like to swing trade on that implied volatility, and that's usually what's called an IV flush, because they're holding a contract and they're waiting for the floodgates to open on all these people. Suddenly their new attention's on Tesla because their earnings come out today. It's stupid people trading options that they have no idea what they're doing. And like I think I've said this once before, your money doesn't just disappear. It actually just moves in the market. So all these people are losing money and you're profiting off of it because these people are actually just, instead of losing money, they're just giving it to you practically. You know, that's a little strategy play for you guys. I'll do a little bit more in depth of an IV flush, but yeah, definitely try to look into this. You know, this is basically just a little review over what happened with Tesla and their earnings today. Once again, guys, like don't get fucking caught holding puts or calls or any type of options towards the end of the day for a you know, sometimes I will admit, I think on Netflix all the contracts started rising, calls started rising, puts started rising. You know, not Tesla, fuck man. Netflix started going up and even puts went up, right? So puts started increasing value as Netflix increased in value. So there are situations like that. This is kind of like another situation where it was just vice versa. At the end of the day, all calls and puts started declining, right? So, you know, sometimes that happens, man. But how you really make money on that is by either A, you short the fuck out of those, you know, options towards the end of the day, or you buy an option the day before and you wait for that IV flush to come in. And there's little other indicators on what the perfect setup for an IV flush is. You can't just pick any random, you know, stock and be like, oh, this PKE stock has earnings tomorrow, right? So I'm going to buy options today for the IV flush to come in tomorrow, you know, tomorrow morning, right? That's not really how it works. If PK only has like 6,000 trading volume, obviously, and that's even with earnings, right? A movement like that, your options, the IV is not really going to be worth much. Maybe you'll end up suckering one or two losers to buy a contract, you know, but that's not really how it works. You got to do stocks that are huge, large cap stocks like Tesla, Apple, Microsoft. Those IV flush, always big game changers. So that was Tesla today. Pretty sure you guys heard me rant enough, but I hope you guys learned something pretty important. I know I always do. You know, going over my material, I always learn something new. So yeah, I'm going to leave it here. I hope you guys had a good one. Watch this video a couple times. I'm going to do a video over IV flush and IV crush right now. So enjoy.